Hi, welcome back to another monthly market update. I'm Ryan Deeter with Key Realty, and in today's video, we are doing a deep dive into the March numbers. We are in the middle of April as we look back on March, as it always takes a month or so to get the numbers back. But we're in the middle of April, which means we're in the middle of the spring market. The time changes happen. Tax day is over. People now have a little extra cash and can go look at houses a little longer. So that means the spring market's here and in full force. How much? We're going to take a little peek at that now as we got March numbers and kind of see what's going to happen in the next few months. If you're looking to make a decision to buy or sell, hopefully this video is helpful for you. Or if you're just looking to understand where the market's going or have a real estate conversation here in Columbus, Ohio, hope you enjoy, and let's dive in. All right, here are the March numbers for 2024 that the Columbus Board of Realtors provides for us for the whole Columbus region. Again, this is for the whole snapshot of Columbus. You can see all the counties that includes. So anything that's put on the MLS data gets put into this and then used as data. If you are interested in a specific area of Columbus, I highly recommend they do break it down per zip code or county or school districts, things like that, where you can really dive into the data to understand your market and your area, because that matters as well. But we're going to take a look at the whole picture here today, as we do every month. So starting with the closed sales. Closed sales are down just a slight tick here, not a huge difference, but we are seeing an uptick in contracts, which means next month we'll probably have more closed homes than last month, because that's what's coming down the line. And so nothing surprising there, pretty steady. We are still seeing that low inventory keeping prices up, and in fact we're seeing that really fuel this spring market. So we are in the midst of the spring market, and you can see here, this is what I want to focus on. I always focus on the holistic numbers of average price, median price, and average price per square foot. As those continue to go up, I look at them as, hold right in line really with the numbers sitting around 8% on average if you take those three numbers. And that's, from March to March. So we're seeing a pretty good appreciation, pretty healthy there. But what we're seeing now is when we see from March to June, what takes place. That's what I really want to focus on today. And if you see this from last month, and really from February to June is what I talk about. So last month was the average price was $336, and we saw a pretty significant bump here now from $336 to $355. And that is a 5% appreciation in 1 month. That's usually a pretty good year for a lot of markets. In fact, that's the average year across the board in the history of the market. It was 5%. At least it was a couple of years ago. It's probably higher now compared to what since COVID. But that used to be the average yearly interest or yearly appreciation rate. Now we've seen that happen in 1 month. And so what takes place is this chart is going to perfectly point it out to us, is that from really February, late January, we see really all of our appreciation happen from January to May. And what that does is, I say May because it ends, closings will, you get a contract in May, you close in June. So really around June is when that number really peaks. And so we saw that happen really drastic the last few years, and we're seeing it again this year. We're not seeing anything different. It's no surprise that we're out there and there's competitive offers. I've heard of 20 to 30 offers on a house that's reasonably priced and really competitive. I've seen things go for over $50,000-$60,000 over asking now, and we're starting to see sellers start to price accordingly. So we are starting to see that market really ramp up, and the competition is really fierce right now. I don't say it to scare you, but I say it to prepare you, because if you are looking to buy a house in this market, you need to be prepared. You need to understand what you're dealing with, understand the competition, because if you don't, you're just going to be looking at houses and losing offers. So it doesn't make a difference if you understand, or if you can look at a house and make an offer. What makes a difference if you want to get the house and win the offer. So you need to be prepared, and that's where professionals are going to help you, whether myself or another agent that understands how competitive a market is this time of year, and really till June is kind of that window. Now, what I tell people is that if you don't want to play the game of multiple offers and buying it as is, and what's called an appraisal gap, I'm not going to get into the weeds today, but all those things you have to do to win offers right now. If you don't want to play that game, the best strategy is to wait till see if something misses the first weekend. It goes on the market the first weekend, and for whatever reason it doesn't get in contract after that first weekend, then you have a little bit more negotiation power. You don't have to throw the whole shebang at it to get the to win the offer. You may get it at the list price, who knows? Um, there's strategy to that, and happy to talk more about that if you're interested, but that's not what this video is for. Just want to kind of point out real quick what's going on. So looking at last year's data, if we look at February, this is 23. Yeah. So last February of 23 saw the average price was 315. March, it jumped up to 328. So not quite as drastic as a jump as, I think what we see February of 24, we saw 336 to 355. So almost a $20,000 jump. And we're going back to February of 23, 315 to 328, just about, $15 to $18,000 difference. So we're seeing an even bigger jump this year than we did last year. And that's what I want to focus on, because last year, if we continue on this trend of March, wrong one, March going into, thought I had this here. Let's find April. Bear with me. April, there it is. April of 23, we see here. So let's go back to March. March was 328. April was 340. So we saw a pretty big jump there. So that's what I expect when we hit March this year to April. We get the April numbers, what we're in right now, we're seeing that jump. This is, one of the bigger jumps we see is from March to April. The average price point really jumps pretty quick and drastically that year, or that month. And so that's where, a lot of the offers are made that you're just blown away by, and people, neighbors can't believe what the houses are going for and things like. You start hearing stories like this. We hear it every year that you can't believe it. So then April 23 to May, you're starting to see this really just pick up, 340 to 360, so another $23,000 jump. And then, then we see from May to June, 363 to 370. So still a jump. This is, and you got to think everything that's, these are closed pricing. So it's the things that are closing in June are getting in contract in May, most likely, and then closing in June. So these are what's happening in June. And then do I have July? What's this? That's December. So this is year over year. You can see that we end up the year at only, 5% year over year. About 8% year over year. But we saw quite a bit of, this is last year again, quite a bit of appreciation. We saw about twice as much appreciation. We saw about 12% overall, and we ended up at that 8%. So you saw most of your appreciation happens here, and it comes back down in the fall. And that's what I expect this next year. But I actually think it's going to be drastic in 24. I think we're going to see a higher appreciation rate, higher than that 12% within that short window happen, because we've already seen 5%. We've already seen, quite a big jump. If we hit 5% every month, which is not unrealistic to think that we could have a, almost 20% appreciation rate in a 4-month window or so. So that's where I can see the market going. Not to, again, if you're a buyer out there, it's be prepared to understand this, and you understand you have to make aggressive offers if you want to win the house. But the reality is that if you think Columbus is on the rise and we're going to continue to see this trend, then, if you bought here and then sold here, you lose money. But if you bought here and then sold here, you make money. So, it's just, the reality is that, it's hard to time this market, especially when it comes to real estate, because the right house, may not come along the next 6 months. It may be there now and you may have to pay for it. But you have to be prepared if that's the right house for you. So that's the goal, the message of, for buyers right now, and for sellers, this is something to consider. If you're looking at selling your house, understanding this market, understanding what buyers are doing, understanding how buyers are reading the market, and putting yourself in buyer's shoes, and being prepared as well in a sense of how do you list your house appropriate to get those offers, to get the best offers. And there's a couple strategies. One is to, kind of push the market yourself as a seller, and one is to let the buyers push the market. And I am a big fan of letting the buyers push the market, pricing it reasonable based on what's on paper, and the buyers understand that they have to be competitive because there's competition. So there's a lot of strategy when it comes to pricing. And in fact, I know a lot of people think that this is one of the hardest markets to actually price a home in. So because it's shifting so quick, and you have 1 month is a little bit slower, then all of a sudden it just picks up, and it can be tough. So understand people's pain in this market, but also if you have a plan, you can really navigate this. And so with that said, I do want to end on buyer um, loan applications here that we see. Nothing crazy happened. I do want to point out interest rates. Interest rates dipped down, and I think that's part of why we saw this higher bump this month. So that may be a factor, and they're starting to creep up. They went back up to that 7%, and they were down in this 6.5 range, and so we did see a little bump in the interest rates. Will that slow buyers down? I don't know. I keep thinking it will. I've thought this for the last 3 years, that it will slow buyers down since we hit these higher interest rates. And I think a lot of people really are just tired of waiting for interest rates to come down to make their plans. So I think they're just, saying, screw it. Let's buy a house. We can always refinance if it comes down, but we can survive on what it is now. And we need a house. And so that's what we're seeing in the market. I think that's why we're seeing a lot, I think more competitive than it was last year, in my opinion, thus far. So hopefully this is helpful for you. Hopefully you found some usefulness out of this. And if you have any questions, I'm always happy to have individual conversations with you. Please feel free to reach out and touch base with me, whether email, text, or reach out on social media. And I will look forward to hearing from you. Thanks. Have a great day.